Okay, let's take a look at this little exercise related to the statement of cash flows. And the name of this exercise is Analyzing Investing and Financing Cash Flows. Now, hopefully we understand that when we're talking about the statement of cash flows, that there are three portions to it. And one of those, probably operating section or operating cash flow activities, but the other one is investing, and the other two rather are investing and financing activities. So this exercise actually looks at the two sources of cash inflows and outflows that in terms of quantity or frequency of occurrence don't occur all that much, especially when in comparison to operating activities. However, these do tend to be, on the whole, much larger transactions. So let's go ahead and get into it. December 2016, Paxton Corporation's long-term investment account increased by $6,750, which was the net result of purchasing some stock for $36,000 and selling stocks that cost $29,250 at a $2,700 loss. Okay. So, kind of an obvious, we're talking about investments here, and we're going to have something to do that we're going to have to work on for the investments portion of the statement of cash flows. So this first portion of our exercise, first paragraph, does pertain to the investing section. So we want to understand what's going on here. The amount of, it says that the account increased by $6,750. So what we want to understand is that this is not a cash account. So the cash here is going to end up being reduced. We spent $36,000 on some type of stock investment. So when we put this $36,000 here, we're going to put that in as a negative because that is a cash outflow for those stocks costing $36,000. Let's see here. For the sale of these stock investments, we're going to be going the other direction. And in this case, we're going to be adding, because when we sold these stocks, we received money. How much money? Well, it says that we sold it at a loss, so we're going to take $29,250, and then we're going to subtract $2,700. Okay? And that's going to give us $26,550. So we didn't have to make any adjustment to the purchase of stocks because we haven't had any time to realize, all we did was buy them. So we haven't had an opportunity to sell those yet. So we might ultimately make money on these, we might lose money on them. All we know right now is that we spent $36,000 on these investments that are hopefully going to make us even more money than the stock investments that we sold. So we had I just want to explain this, we had on the books $29,250. So I'm going to actually clear out the calculator here for just a minute. It says that our account went up by $6,750. That's because we now have $36,000 in stock investments, and we got rid of, at cost, $29,250. Now that's not part of the question. We don't need that $6,750 as an answer, But just in case you were wondering where they got that increase, this 29,250 was on the balance sheet at cost, and now we're getting rid of it, and we're adding $36,000 in its place. That's what this 6750 is, just what's on the face of the balance sheet. As far as what's going on with cash, we spent $36,000, and then when we sold these stocks right here at a loss of $2,700, well, that means we got $2,700 less than the $29,250 that we paid for them, and so we have a cash uptick of $26,550. All right. So that is our investing portions, and it says that right here of what took place. It says also this company, Paxson Corporation, its bonds payable account decreased $4,500. The net result of issuing $58,500 of bonds and retiring bonds with a book value of $63,000 at a $4,050 gain. Okay, so what that means for us, the first part of this is pretty basic. Is worth noting that bonds are a financing activity. And we can probably figure that out because it's right here under cash flows from financing activities. But we want to also remember that we won't always have this kind of information like this. So issuance of bonds, anytime we see the word issuing or issuance, that means that we are receiving money. And in this case, we are receiving $58,500. Okay? So, now this is pretty heady stuff for our level of accounting, but how do we calculate a gain or loss on the redemption of a bond? Well, we take the book value, and there's a whole lot that goes into this book value, and that is for another video. We'll just put it that way. But this $63,000 bond is a bond payable or a liability. Okay, so this $63,000 right here is what's showing up on the balance sheet. Well, the carrying amount of the bond is $63,000, and I'll just say that the bond's payable amount might be more than or less than $63,000, but the carrying amount or the book value is $63,000. Again, I don't want to get too caught up in that because that can be confusing. So what this is saying is we extinguish this debt for $4,050 less than the carrying amount. So we're going to subtract $4,050 from the $63,000 carrying amount to come up with $58,950. So even though we have a gain, okay, we spent $58,950 cash to get out of a liability that had a current carrying amount of $63,000. So this would be we're retiring these bonds is what we're doing. Retirement of bonds, so that means that cash is going out, and therefore, let's see, what is that amount? $58,950, and that is a negative. Okay. Let's see here. So it says, last little thing here, it says what items and amounts appear in the cash flows from investing activities and cash flows from financing activities sections of its 2016 statement of cash flows. So We don't really have a spot to put that, but we can still calculate it out to the side. So here we have $36,000. Whoops, back up. 36,000. Yeah, I'm gonna get it right eventually. 36,000, and that was a negative, plus 26,550 equals. So with regard to our investing activities, we had net cash outflows of $9,450, and with our financing activities, looks like we had net cash outflows of $450. And so what I did there was took the 58.5 that we got from issuing the bonds, and then just subtracted the 58,950 that it took us to retire the bonds, and so we get a negative $450. Okay, so that's a look at some investing and financing cash flows.